Let's talk about taxes.
Yeah, we need to talk about taxes. Well, this is the question everybody's coming in this time of year. Honestly, taxes are one of those. Yeah, I want to reduce my tax bill. Okay, but do you want to do the work that takes? And I'm like, well, what do you mean? You're the one that I'm hiring to do all these taxes. I'm like, yeah, but you actually have to, go through, give us the information. So the end of the year, let's say you're a business owner, it's through October pretty much. October's done. So you've got 10 months of your financials. You kind of know what the year looks like pretty much, right? Yeah. Sure, there might be a few things that happen. Good month, bad month. But, most of your year's made up. So we look at it and say, look, you're on track to do X amount of dollars. You're going to make $500,000. You're going to make $1 million net to the owner. Ouch. That hurts. You're going to pay, $100,000 in taxes. What are you doing about it? So we come up with a tax plan. It's not one thing. It's might be 10 things.
But you can't do it retroactively. You got to set it up for next year.
There is actually some things you can do now. There's some solar tax credits you can go back and do. Capital gains. There are some things that you can do with opportunity zones. You can go retroactively if you owned it in an entity. So it's not 100% true. Are they as good as implementing this year? No. That's why I don't even like talking about them that much. Honestly, the proper tax planning is doing it now. Should I set up that 401k for my small business so I can put more away? Should I do a defined benefit plan? Should I implement some of these things that are going to get me tax deductions now? Real estate investors have the ability to go retroactively, and that's nice. If you own investment real estate, you can do cost segregation studies. We shorten it and call it cost seg just because that's a lot of syllables there. Goodness. So cost seg, what is it? You're accelerating the depreciation. It's not like we found more tax money for you. It's just taking it.
We're taking it from the future.
Yeah. We're taking it out.
We're borrowing it.
Which is a cash flow strategy, right? Think about it. Would you rather all of a sudden, hey, I don't have to pay as much tax in the next 5 years versus getting this little tiny deduction over 30 some years of his commercial property? It's 27 on a residential. Of course, it's a no-brainer. Most people don't know what it is, don't know how it works, and will it impact you? I mean, we have business owners who are like, hey, I'm worth $6 million. This probably makes sense. I'm like, no, it doesn't. You don't pay enough tax. It's not worth doing the study. If you're making 40%, or are you not making? If you're paying 40% in tax, then it probably makes sense to do it. But those are things that you can do retroactively. You need to have the real estate piece in service. But I mean, the biggest tax tip I can give you is find a tax planner that gives you a detailed proposal. Here's what you should be doing. And maybe it's as simple as putting in my health savings account at work. Okay. Which is only a $4,000 tax savings. Maybe it's the Augusta rule, which is simply, renting your house out for 14 days, tax free. Maybe it's little tiny things that only add up to $10,000 or $20,000, but that's $10,000 or $20,000 that you are not giving to the government. That
can I rent it out to mom and dad?
Why would you rent it out to mom and dad? Your house?
Yeah, I don't want strangers staying in my house for 14 days. I'm just saying.
You're so funny.
Yeah, I'm just asking. I'm not trying to.
Yeah. We'll be implementing this for you later, but we haven't gotten to you yet.
Well, I just know that a lot of people are waiting until after the election to do stuff, but there's really no better time than now.
Well, they're running out of time, honestly. People call us now. They schedule an appointment a week or two. Then we come back with some recommendations. We're now at the end of November, and we're in the rush because we really need to implement something in 3 weeks, right? For example, charitable gifting strategies. I mean, a tax tip you want to hear, if there was charitable givers and you're, let's say you go to church, nonprofits, you consistently give $20,000, $30,000, $50,000 a year away, and you have an asset sitting somewhere like stocks, bonds, cash just laying around, and you have a big event that you're going to just have a big tax bill, right? Maybe it's your ordinary income. A charitable lead annuity trust, we call it charitable lead trust, is a great tax strategy to offset some of that income. We saved a client $40,000 in the year that he did a large Roth conversion. He's like, Brian, I want to do a large Roth conversion. I know I'm going to get killed. He had $2.5 million in an IRA. He's like, Brent, we just got to. But you mentioned some of these tax strategies when we first hired you. And I looked, I'm like, yeah, you're a great fit for it. $30,000. He didn't have to change his cash flow. He didn't have to give any more money away. So,
but he could do that at the end of the year?
Yeah, we did it at the end of the year. In fact, we barely got it in. I think we implemented it on like the 27th and made the contribution to the charity.
What 27th?
The 27th of December.
But the very end.
It was very. It was stressful. Yeah. We were like trying, because there's this whole process to all of this. There's legal stuff we have to do. We got to get the trust set up.
Make sure it's all legal. And
we got to get the attorneys drafting the trust, and then we got to take the trust information and file for an FEIN number from the IRS, and then we set up the account at the investment place where we have Fidelity, Charles Schwab, or wherever. Then we've got to fund the asset from somewhere, right? So in this case, we actually took some stock that was appreciated. And we're like, well, we'll just throw it in there. You don't have to sell it. We'll just put it in the trust. You don't get a tax deduction going in because of the asset. And then slowly, we wrote a check to the church and other nonprofits that he gave, but he saved $30,000. He didn't have to change anything. Here's the problem. He had a CPA that he worked with for 25, 30 years before he met us. I asked him, I always ask the same question. What tax strategies have they shown you? Because that shows the value. And they're like, none. I said, but here's the thing. Don't get too mad at him. When did you ask him to do that? You just assumed that the CPA was going to give you some tax advice. You didn't pay him. What does it say at the bottom of your bill? And we pulled it out. He had given it to us, and we pulled it up on the screen. It says, this is what, $500 and some dollars for the personal tax return, and the business was X. Okay, so that's tax preparation. It said tax preparation of 1040, 1120S. You didn't pay him $1,000 or $5,000 or $10,000 for tax planning or tax.
Not that they couldn't have, they just didn't.
You didn't?
Yeah.
And then a lot of them just don't do tax advisory work. Like, I don't know how many CPAs we bumped. It's like, we don't have that time for that. We're too busy doing tax.
CPAs are slammed.
They are. Yeah. And the younger generation's not getting involved.
Yeah.
The younger generation doesn't want to get involved. I don't know what they're doing. What are they doing? Playing video games? I'm not really sure.
Crypto.
Engineering?
Yeah.
I don't know. It's just not a field that they're drawing people in. And maybe that's because, I don't know, numbers is boring. I don't know. But tax advisory work is drawing younger people in, because it's about helping people reduce their tax bill. And literally sometimes
so what you're saying is a CPA gig might be a good gig for you to check out, because there's plenty of work there.
Oh, it is. Oh, well,
and it's a noble profession.
That's in every field, though. Look, you can't get a plumber to show up, right? Because they're busy. Or, I mean, every field. Attorneys we work with are like, hey, we've been waiting for 2 months to get this one little document back. We're calling. I mean, we give them a ton of work. So you think that we'd be high priority, right? My team's just saying, yeah, they haven't gotten it done yet, and they can't hire enough people to do what they do either, right? So it's but you got to come up with a tax plan at the end of the day, or you're just giving money away that should be yours.
Thanks for watching. You want to learn more? Check out these recommended videos on screen.